Another day, stocks started strong and then faded throughout the session. We still got a little time until the close. Let's get another take. Scott Bauer, CEO of Prosper Trading Academy, is with us here. So, Scott, this morning it looked like markets are going to be in the all clear if inflation is the number one issue, and it came in cool. How come our ramp didn't last this morning?
Isn't that the story, Oliver? Hasn't that? Oh, it seems like it's always the story where good news is bad, bad news is good, right? And we can't make heads or tails from just one economic report. So we get that, I don't want to call it lackluster, certainly wasn't lackluster, but less than expected CPI number, which the market took as a good, indicator that, okay, rates aren't, going up and, sooner rather than later, or, the Fed's not tapering sooner rather than later. And then all of a sudden it turns on its head. So I think what overwrote that one today was, wow, maybe the slowing of the economy is here much sooner than expected, which is why you're seeing the reopening trade. Really, some of those stocks get hit today, and in the small caps, the Russell really get hit today.
I like this point, Scott, because at the top of the show, I offered up a few different ways to interpret today. There's several, right? And this is, I think, a really interesting one that takes the route of looking at inflation and its ties into growth, where you hear a lot of talk from Fed officials and strategists that we should be rooting for transitory inflation. But sometimes I wonder if we should, if the inflation has been the offshoot of much needed growth, right? I mean, right. Suddenly they're going to decouple entirely?
And you have all of the pundits, and I'm not, listen, let me just start this by saying I'm not advocating for Jerome Powell, the Fed, but you have all these pundits that for months and months and months have said, basically you're full of what. Maybe they're right. Maybe they are right. And
the Fed.
That is, the Fed. Yeah. And if that is the case, then, that's probably a negative. Overall, we'd like to see, okay, inflation is going to be moderating, but on the flip side of that, and I think that's what the market is telling us today, all right, the economy's slowing down. So it's really a give and take, and it's just so interesting to me that it comes at a time of year in September, which is historically the worst month for returns for the major averages, during the year. I still think we go higher by the end of the month. I really do. I think we get September back to the flat line, which I think a lot of people would breathe a big sigh of relief.
Scott, where on days like today do you think the dip buying opportunity is the clearest? I mean, do you just go with what was winning prior and buy NASDAQ, or do you go with the deeper weakness in some of the reopening trades or the Russell or something with a little bit more of a cyclical tie and bet on recovery driving a bigger bounce back there?
Yeah, I don't know that I would go head first into recovery stocks that are just getting hit on a 1 or 2 day move here, because we've seen those trends last longer than that. So on a day like today, I really look for the technicals, and I really look at volatility. Volatility is not really going up. There's a lot of, scared people out there, scared investors, scared traders, but we're not really seeing the VIX rallying too much. Is it True. 20 historically? Is that a high number? Yes. Is it high for where we've been over the last 18 months? No. So I'm not really seeing opportunity in terms of being able to sell volatility or sell puts or sell put spreads in stocks that I'd like to own, because the volatility isn't there. So I just look at the technicals, and quite frankly, I look at a stock like Apple today. And yes, they had their news. Maybe it was disappointing, but that thing came right down to its 50-day moving average. It's trading just below it right there. So I look at a stock like that today and say, yeah, that's one I probably want to pick up. If the technicals start to fail on me, not just today or tomorrow, but if they start to fail, then I start to rethink things. But on a day like today, I'm really, really looking at some technicals. But from a volatility perspective, difficult to trade it, because you would think vol would be higher, and it's not.
So not a lot of opportunity to collect premium selling options, but maybe an opportunity to take a swipe at Apple on a moving average.
Absolutely, I believe so. Whether it's just from buying calls or maybe a call spread, to limit some exposure. But yeah, volatility is not real expensive. I was looking, I wanted to sell some put spreads in there today, and premium levels just are not there. Volatility hasn't really gone up. And if you look at the vol in the SPX, or if you look at the VIX itself, we're just not seeing big pops there at all. I'm really, unfortunately, not seeing that opportunity. I wish it was there because I would love to sell some premium, but I'm not going to sell it at these levels.
All right. Scott Bauer, like it. Nice details here. Appreciate the shout out for the stock that's on your mind here today. Always helpful.
Absolutely.
Thank you, Scott. Mr. Bauer, CEO, Prosper Trading Academy.